take a look at futures this morning after the markets were closed for the Christmas holiday. Green across the board. The Dow indicated higher by 21 points, so just above the flat line. It's the final trading week of 2023. Stocks have surged for the year. The Nasdaq up 43%, the S&P 500 up almost 24%, and the Dow up over 12%. Joining me now is ERShares CEO Joel Schulman. Joel, great to have you on the program. Thanks so much for being here. Let's go ahead.
Good morning. Thank you.
Let's go ahead and start just getting your outlook for markets in the new year. A lot of investors are weary to get in the market when it's run so far so fast. What do you think about at least the first or second quarter of 2024?
Well, I mean, we've had a big run-up primarily in the mega caps, and people have got to understand there's a lot of room to go in many other areas. And so we're very bullish on small caps, and actually we're seeing entrepreneurial growth companies in particular really take off, starting in early November. So since early November, small caps have been up about 21% overall. Entrepreneurial small caps about 30%. Entrepreneurial companies are up about 25%, including the large cap. So we're seeing investors trading, rotating now from the mega caps to the smaller large caps, which are in the $10 to $15 billion range, and into the mid caps and the small caps in the $1 billion, the $5 billion, $8 billion range. That's where the real opportunity is. Going out in duration, so longer duration equities, meaning most of their cash flows are coming in the future, which tend to be growth stocks. We see a lot of opportunity in those areas in particular.
Okay. The Wall Street Journal writing that inflation around the globe is slowing faster than expected and could reach a comfortable zone by the end of 2024. Of course, inflation's been a big problem for our underlying economy. Want to get your thoughts, Joel, on where you see inflation heading in the new year, and even if the rate of price increases, which is what inflation is now slowing. Prices are still stuck. A lot of this has been very sticky with housing and food costs up roughly 20% over the last 3 years. So people feeling the pain of that, and there is some concern that that may translate into recession next year.
No, I don't see a recession next year. Inflation has come from 9% 18 months ago, is running over 9%. Last year at this time, it was 6 to 7%, and now we're about 3%, 3.1%. So we're half of where we were a year ago. And you mentioned housing. Housing's been very sticky. You've got a lot of homeowners who refinanced during COVID. They've got 3% mortgages. They're going to die with these things. They're not giving it up. And as a result, we've got tight inventory. If we did not have the housing, which has been creeping up at 0.4, 0.5% last year, it increased about 7% year over year, and now the latest readings showed a 0.1% increase, and that includes housing, which is running still at a 0.4% increase. If housing were to come down a little bit, we could actually see negative CPI in 2024. But we've also got to remember, we've got now disruptions in the Red Sea, and that can create problems with energy coming around the corner.
Right. And I think you're right about people dying with those low interest mortgages. Certainly nobody wants to downsize right now or sell their home if they don't have to. So the only way I see the housing market dynamics changing would be if the Fed cut rates, which would impact 30-year mortgage rates as well. So investors are definitely betting on that. That's what some of this rally has been about. How many cuts do you think we could see next year?
Well, this is the great news about what's going on right now. So if you look at the Fed dot plot, right now we're currently at 5.25%. Next year, the dot plot's showing about 4.5%, then 3.5%, and then 2.5%. For the next 3 years, we're seeing the Fed anticipating about 1% interest rate cuts per year. And we've seen the long bond, the 30-year long bond Treasury and the 10-year Treasury drop from around 5% a month and a half ago to now 4%. The 10-year is now 3.9%. That can continue to come down. So this is the good news. And to your point, mortgages have been running as high as 8% in late September, October. They're now down into the 7s. It could drop further. It's not going to approach 3%, but they will come down. And as mortgages come down, people will refinance.
I think you're right. Let's talk about quickly.
They actually won't refinance, but they may give up their houses and they may move. The refinance is going to be tough to beat at 3%.
I know what you meant. The market will start to move because people will start to there'll be turnover, there'll be more inventory, the prices will come down. Joel, let's just talk about the sectors that you're watching for next year.
We like healthcare. We like the growth sectors, particularly healthcare and IT, communication services. And again, we like to see those high growth companies we think have the best opportunity. Those are the ones that got hurt 21, 22, and early part of 23. We see those reversing. Investors got to recognize that many of these are down 80, 90% from their highs in Feb 21. So they've got room to run. They're starting to move. And so we like the growth sectors, IT and healthcare in particular.
Joel Schulman, thank you so much. Great to see you this morning.
Thank you.
Coming up, we're less than a year out from the 2024 race for the White House, with 3 weeks to go until the Iowa caucuses. And with President Trump off Colorado's ballot for now, will other states follow? Former President George W. Bush senior advisor Brad Blakeman is here with his